Okay, here's another one. Great opportunity. If we get a daily close, which you probably will, which is below the low of this kangaroo tail, then that's a busted kangaroo tail, right? And it's going to fall through here, and the market will probably bust through here next week. So that's a great opportunity next week to trade this busted kangaroo tail. But we need confirmation. We need a close on the daily below this low. So that's trade one, right?
Hey there, it's Walter here from FX Jake, and I want to talk about a naked forex setup. A lot of people were watching this setup. This was the pound US dollar, and I've had some questions about this. What I think I should do here is talk about why, to me, this was not a buy, and in fact, I think it's going to be a pretty good sell. Although, it could have, the close on the daily candle here could have been a little bit better. But let's just talk about this. First of all, there's no doubt that it's a nice support and resistance area where this little tiny candle printed. We see that we topped out here, we found some resistance, and we certainly did have some support as well, where you can find, oh, I don't know, there's about 3 candles where it just couldn't break through here, back here, and then it finally did break through. Even when it came up, back up and broke through, look what happened. It closed right on that level this day right here. That's that's June 5th, where the market came and closed right there. And then the next day, of course, it came back up. Now, with the big fall, it came down, and it printed a little kangaroo tail there. Now, a lot of people will trade what they call Pinocchio bars. And that's from what's his name, Martin Pring. It's in Martin Pring's book, and a lot of people will trade those. I trade kangaroo tails, and they're a little bit different from Pinocchio bars, because what happens with the Pinocchio bars is that people tend to just look for any old candle that gives you the look of a Pinocchio bar. And what I do with kangaroo tails is I actually have specific rules that I follow. So, for example, there are some that just wouldn't qualify, like this one right here, just wouldn't qualify for me as a sell signal just because of where it's at, and it's in a choppy market. So there are specific rules that I'm looking for in terms of my trades, and a lot of people who, like for example, this one wouldn't have qualified either. And let's talk about why. The simplest way to look at this is that the close and the open are important, and the close and open must be in the bottom third of the candle. Now, when we're talking about this one, this would be a sell setup, obviously, because the market's been moving up, and the close and the open must be in the bottom third for a sell setup. If this were a buy setup, it'd have to be in the top third. Okay. So that's the first rule, and you can see here that that certainly is the case here. If I have any questions, I can always pull my fib grid across and see, and it looks like it's well, in fact, it's in the bottom 23%, the open and the close here. So it certainly fits that one. So in terms of that rule, it would work. The next thing is that I want to see some space or room to the left of my kangaroo tail, and you can see here that this kangaroo tail has a whole lot of space. I can pull this box across and show you visually the space that it has. I have to pull it up a little bit because this tail is in the way, but what that means is to the left of this candle there isn't a lot of price action. The reason that's important is because we're generally trading reversal setups when we trade kangaroo tails, and we don't know that the market's going to reverse here. At this stage, when we see this candle print right here, we don't know if this is going to be a reversal, if the market's going to fall here, but we do know that if it is a reversal, it's most likely going to have a lot of room to the left. If you look at those reversal points on the chart, they often print on areas of the chart where there hasn't been any recent price action. That's very important. Here's another kangaroo tail here. Look at how this is obviously also a double bottom, but look how this candle sags so low that the bottom of the candle has printed an area in the chart where we haven't seen any recent price action, right there, like that. So that's pretty critical for these setups. All right. So that obviously also fits. So far we have that rule also ticked off, which is number 2, which is we have space or room to the left of our candle. Okay? Okay, I'm not gonna move that. I was gonna move that and get out of the way, but oh well. 2. Space to the left of the candle. All right. Number 3. What's our third rule about trading? Now I can move it. Kangaroo tails. The open and the close must be inside the previous candle's range. You can see that's where this one starts to fall apart. Open and close inside of previous candle. And what I mean by that is that the previous candle has a high and a low. Okay? The previous candle must have a high that is higher than the open and the close of the kangaroo tail. And the open and the close of the kangaroo tail must be higher than the low of the previous candle. So you can see this previous candle here has a high. I'm looking down here, right? This previous candle has a high of 59.06. The close obviously is not inside the previous candle because the close is at 59.15, so it missed it. It missed it by 9 pips. So that didn't work out here. That's the third rule. And the fourth rule is that the next candle, the very next candle, should trigger the trade. Now, that means it should make a new high or a new low. So the next candle trades higher or lower, for the case of a sell trade, than the kangaroo tail. Now, what I do is I'll put a sell order below the low of the kangaroo tail. So the low on this candle was 58.97. Now I would put a sell order at 58.92 or 58.90, right around there. So 5 to 7 pips below the low of that tail, of that kangaroo tail. And you can see the next candle actually didn't trigger that. It wouldn't have triggered that order. It went as low as 96. So while it did go 1 pip lower, it certainly didn't go 7 pips lower or even 5 pips lower, and it wouldn't have triggered my order. Now, why is that important? Well, I want the market to tell me that it wants to go in that direction. Now, there's another thing about this, which is where it gets kind of tricky, which is, in essence, I don't want to take this trade if the new high or the new low is made during the Asian session. Now, why is that important? Why is the Asian session coming into this? Now, remember, this is for daily chart trade only. If I'm trading, a 1 hour or a 4 hour candle, it's totally different rules. But if it's a daily chart candle, which is what I normally like to trade, then I am not going to be triggered in the Asian session. I won't even put my order in until after the Asian session, or at the very end of the Asian session. So, and the reason why is there's a couple of reasons. Number one, the Asian session tends to go in the wrong direction. So, if we're looking at like this candle right here, and you're going to have to take my word for it. Well, we can look at it. We can look and see. This candle right here, you can see that it made a wick here, right? Now, I don't know if this is true, but I believe that this candle, which is the February 8th, 2012, I believe that this wick would have been made during the Asian session. You don't believe me? I don't know the answer to this, but we're going to go ahead and risk it and see what the answer is. So let's go to the 1 hour chart and look at February 8th, 2012. See if we can get that. Bring that one up here. There it is. Okay, so if I put the period separators, you'll see where the new day starts here. So obviously the new day on this candle that I've highlighted started right here where this dashed line is. Let's zoom in so we can see this a little bit better. So the new day, I had it on right here where that red line was. The new day started here. So the previous candle closed on this candle, and then the next day starts here. So the Asian session starts out the day, and you can see this is exactly what happened. The market went up for the first 8 hours or so. It sort of peaked right here at the beginning of the European trading session, and then it fell, and then when New York came in, it went up a little bit of fake out, and then it fell for the rest of the day. So you can see what happened here was exactly what I was talking about, which is that the Asian session will go in one direction, and usually Europe or New York or both will go in another direction. So here we have an example of the market going up 33 pips during the Asian session. Of course, the beginning of the New York session, we'll talk more about that, or the London session. We'll talk more about that in a moment. And then it goes down for 113 pips for the rest of the day. So this is very typical of what happens during a typical Asian typical daily candle, that the Asian session will go in the quote wrong direction. That is why I won't place my order here, because my guess is that this candle right here, the wick and where it went 1 pip lower than the kangaroo tail, that probably happened during the Asian session. So one, I want to definitely clear it by at least 5 pips, and two, I don't want it to happen during the Asian session, because that's usually when it's messing around going the wrong direction. Now let's talk about this candle right here. So there are a couple of things I don't like about it. One, the candle before it was huge and very bearish. It closed near the low and it didn't show any slowing down. What I mean by slowing down is that, see how when the market moved up here, all of these candles started printing more wicks, wick, 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 wick. See how these wicks started to show up? That's usually a sign of exhaustion and that the market wants to fall. We don't have any real wicks here. The only wick we got at this stage was the kangaroo tail, and even that wasn't that impressive, especially considering the previous two candles. Previous two candles were pretty big. This one was 159 pips, and this one was 230 pips. And our measly little kangaroo tail here, although it fits all the rules, it's only 102 pips. So, you know, it's got an open and the close inside the previous candle's range. It's got an open and the close in the top third. It's on a nice support and resistance level. Remember, we had support here, resistance there. But the fact is, there's still some downward pressure here. Now, let's take a look and see if the market actually triggered a buy above this. Because remember, the buy would have been right about here. Let me draw it on the chart. Would have been a few pips above the high. It would have been right around there. Whoops. Right around there. Let's look at the 1 hour chart and see where it would have been triggered. All right. So here's our kangaroo tail right here. This is the day before where it went down, and here's our kangaroo tail right here on the 1 hour chart. It looks like a big dish on the 1 hour, but obviously on the daily it's a nice little tiny kangaroo tail. So our buy order is above the high. The high of the kangaroo tail was actually at the end of the day right here, and so that high is 55.16. So a buy order around 55.21 would have been fine, which is right here. Okay. Now, the market doesn't quite hit it during the Asian session. However, here on this, so this is, if you're in Australia, for example, this candle closes at the moment. It changes during, you know, parts of the year, but this one would close at 7 a.m. This one closes, sorry, that closes at 8 a.m., 9 a.m., 10, 11, 12, 1, 2, 3, 4, 5. Okay. So this one closes at 8 a.m. London time. So this would be 8 to 9 in the morning. So this is the opening candle in London. So what you had here was sort of a pre-open spike that tagged and triggered the trade. Now I can see where people, especially if you're in North America and you go to sleep around these candles, you might put your order in and then boom, you get spiked in before the European session. And actually this is quite typical. If we look back at other let's bring up my pound chart here. If you look back, what you'll see is that this move here is quite typical. This is, I've marked here the opening candle, which is the 8 a.m. candle in London. All right, that's 8 a.m. And obviously the 7 to 8 a.m. candle is where it triggered the order, would have triggered an order. And you can see what's happened here is that it's moved down after that. So you get a little spike and then it goes. Here's another one. This is this candle right here. So this candle is 8 a.m. So that's the opening candle, and that's the candle before the opening candle. Here's the candle before the opening candle. There's the 8 a.m. candle when the London market opens. Here's the candle before the opening market. This is from 7 to 8 a.m. in London. This is the 8 a.m. candle. Do you notice a pattern here? Here's the here's the opening candle in London. Here's the one before. It didn't really do much. Here's an instance where 7 to 8 a.m. London market went down and then it kept going down, and then New York took it higher. But this is pretty typical. Here's another one here where the market before the open, the market really fell, and then at the open it just kind of sat there. So you have to watch out for that London market spike, the pre-open spike. It will usually happen between 7 and 8 a.m. London time. So it's this pre-open candle. So that's another thing to watch out for. Now, I don't, if I got triggered on that candle, I'd be okay with it. But the fact is, the overall picture of the market was not telling me that it was slowing down. And the reason I say that is because we had really big candles before this kangaroo tail. Also, it does have a little bit of space, but remember, relative to these previous candles, this candle was quite small. So yesterday, when this candle was forming, I was hoping that it would actually close below the low of the kangaroo tail, because I want to sell this sucker and go against the kangaroo tail. This is what I call a busted kangaroo tail. Now, if you look here, the low is 54.13 and it closed at 54.16, so it closed a little bit higher than the low. But I think next week, when the market opens, it's probably going to give us a great opportunity to sell and target these highs right here and then these highs right here. But again, I want to see the market sort of take out the low of this candle, which was Friday's candle, and that low is 67. So if it can get to 53.60, that would be great, and then I can sell it all the way down to these highs, and even these lows. So that's approximately 90 pips for the first target, and then another 210 to the second target. So that, to me, is a pretty good looking setup on the pound. I just wanted to explain that because I know a lot of people were asking, they took it, why did they get burned, what was happening here, all those sorts of questions. I think you really have to put everything together here. You see that the momentum is not slowing down. You see that the candle was triggered during the opening or pre-opening of the London market, which is often a spike. Even worse would have been if it had triggered during the Asian session. That would have just been awful. So lots of reasons to not take this trade, and I just wanted to show you how I see it, and in fact why I was thinking about taking this trade in the opposite direction and selling it. So I wish you happy trading, and I hope to talk to you soon. Okay.